It's a multi-billion-dollar push for a turning point in the semiconductor industry. The industry was born in the United States, but East Asia now dominates chip making. Washington's CHIPS and Science Act hopes to change that. It includes $52 billion in subsidies for US manufacturers to boost self-sufficiency and competitiveness.
So the impact will be that this will be beneficial to support investment needs, to create a more significant presence for semiconductor manufacturing on Western soil. And the reason that the US is very interested in doing that is to essentially provide for more supply chain security.
What you're seeing is that every single region in some way or form will continue to evolve their supply chain to mitigate some of the risks that we saw during the pandemic and the risks that we continue to see when there are trade issues between two very large countries. And at least in the industry in the US, you're going to see at least some push towards more investments that will help these companies mitigate the challenges that they faced in the last two and a half years.
In a sign of the mixed prospects for the sector, on the same day, Micron warned that demand is falling off. The leading US maker of memory semiconductors cut its revenue forecast for the current quarter. Experts generally agree that the chips industry is on a secular uptrend, but facing a cyclical downturn at the moment. This outlook has brought about the contradictory situation where chip makers talk about a fall in demand, but companies say they can't get enough chips for their products.
A lot of these companies could not get the chips because there was a chip shortage. And so they essentially double ordered, right? Or triple ordered in some cases, in order to make sure that they didn't have that problem moving forward. But now that that's over, right, and the chip shortage is starting to ease, right, we are seeing lead times start to fall, right? So they plateaued and then now they're starting to fall. I think what we will see moving forward is that we will see demand continue to still be strong, right? But it won't be as robust as it was, say, a year ago, right? When there was clearly a shortage in the market.
With chips a key part of our daily lives, the concern is that any semiconductor downturn could be bad news for the global economy.
Chip sales actually track very well with certain manufacturing sentiment indicators, most notably PMI data, and that comes out on a monthly basis. Now, the PMI data would suggest that businesses on the manufacturing side are definitely getting more cautious. It's very difficult to talk about these things in terms of absolutes. We can only think in terms of probabilities, but in my view, probability would suggest that we will be seeing for the next 6 to 12 months slowing growth and probably contractionary growth.
While the demand boost for smartphones and PCs from remote working during the pandemic is drying up, industry watchers see new sources of demand for semiconductor chips.
The next frontier for chips really is going to be artificial intelligence, is going to be Internet of Things, is going to be all these kind of advanced versions of what we've seen right now, right? Intelligent devices, if you will, right? If I had to summarize it into 2 words, right, it would be intelligent devices. We're seeing that across the board, right? This essentially advancement of the type of technology that's being used.
You're going to still see a lot of investment in high performance computing. I think whether it's cloud infrastructure or you're looking now at edge infrastructure, and the buildup of edge infrastructure, I think there's going to be more investment in these areas, and that will drive longer-term growth for the semiconductor space, at least for computing chips, and also any supporting chips around these computing chips.
And as for advice for investors right now?
We're just now beginning to see some pre-announcements in terms of companies either talking about slowing demand or pushing out expectations that they had originally. And so we have to go through that period that probably will occur probably until the end of this year. I think the industry itself will probably bottom out by the end of this year, and then slowly maybe stay there for a couple quarters as we go through this inventory correction. But I expect that by the second half of the year, next year, and going into 2024, we could start seeing some areas where that we'll start seeing a recovery. And so I think from an investor standpoint, most investors will probably sit in the sidelines until sometime late Q3 or even into Q4 before they get back into investing in the semiconductor names, so that they can ride the recovery of this space. But I think right now it still remains a very volatile environment, just because the macroeconomy, the geopolitics that are surround the semiconductor industry remain very volatile.